While the stock market is signaling a historic boom, the mood of the average American has collapsed to levels we typically only see during deep recessions. This is one of the widest divergences in modern history, and it forces us to ask, why do Americans feel so broke when the country is supposedly so rich? The answer is that the stock market is no longer an accurate representation of the real economy. This chart shows stock ownership by net worth. The bottom 50% of Americans, they own just 1% of all stocks. Meanwhile, the top 1% now owns 50% of the market. Underneath the booming market narrative, most Americans feel trapped in economic insecurity as wealth inequality worsens. And it's a vicious cycle, because worsening inequality is actually bad for economic growth. Just look at the Gini index. This is basically the thermometer for inequality. Since 1980, that temperature has risen by over 20%. The US is now more unequal than it's ever been. And this isn't just a moral or societal issue. History suggests it's an economic problem too. This chart measures how long countries sustain economic growth compared to their level of inequality. The pattern is clear. Dots on the right represent unequal societies. Notice how they're lowered down, meaning their growth spells are shorter than more equal societies. Therefore, as the gap widens, economic stability actually drops. When wealth concentrates at the very top, the engine of the economy, the middle class, runs out of fuel. Here's why that engine is sputtering. For the wealthy, the top 1%, their wealth is built on equities, assets that produce cash flow and grow with the economy. As US companies prosper and rake in profits, so do the 1% invested in them. But for the bottom 50%, their main asset is usually real estate, their home, and that's moving further and further out of reach. Just look at this chart, which shows the ratio between the average home price and median household income. It now takes the average family 7 years of savings just to afford a down payment on a house. This effectively locks the majority of Americans out of the number one way the middle class has historically built wealth. Therefore, to bridge the gap between wages and the cost of living, people are turning to debt. US household debt spiked by nearly $200 billion in just one quarter of 2025. So while the top 1% is leveraging assets to get richer, the bottom 50% is leveraging debt just to survive.